Hey everyone, welcome back to Ryan Makes Sense. Today we are going to be looking at Groupon. They just had their earnings and I'm recording this the weekend prior because the type of time frame and content that I look for at stocks is evergreen. Meaning you could watch this in 1 year and my charts and okay, maybe not a year, maybe like 6 months. My charts and my charting and my financial calculation are going to be pretty much intact, given if the company doesn't have a major acquisition or dilution or gets bought or sold or has some type of scandal. So I would say 90% of the time it's going to be pretty, you can watch this 6 months from now. So what I'm going to do is I'm going to see if there are any gaps on the way up that Groupon needs to close. Not that they need to close, but it kind of acts like a magnet where the stock will, if it is going in the uptrend direction, it has like this. It has kind of a psych number for people to think about, like, oh, there's a gap to fill at 50, 57, 56. So we'll remember 56. We'll just call 101. So 56, 101. All right, and that's as far as it's going to let me go. So gap fills as far as it would let me go is 56 and 101. Although you can see the stock goes all the way back to frickin' $600. So what we're going to do now is just observe a few things. We can see that the relative strength index is honestly going in a nice direction. Momentum is slowly going up, which is also nice. Money flow is heading up. We can see it has a little angle that way, but we don't know what that means. We don't know if it could be a little angle down and up or a little angle down and fall off a cliff. And then relative momentum indicator right here is heading up, so that's all good news. They are not profitable. That's a bummer. This is a bummer. Look at that. We want to see it going this way. This is a bummer, this is a bummer, and this is a bummer. They're diluting shareholders on top of decreasing sales. Ay caramba. Okay. This is not going to be a pretty review, unfortunately. However, their margins are amazing. They need to have a bit of a more disciplined balance sheet. We'll run through this. So I'm going to take the market cap, income, and sales. Market cap I only include if it's over 1 billion. This is not over 1 billion. So we're going to include sales of 525 million. Everything's in millions, so I'm just going to shorthand it. 525.35. They lose 138 million. That is horrible. We're going to include cash and debt. They have 101 million in cash, which is good. So plus 101.33. Total debt is 229 minus 229.14. And it looks like they are attacking their debt. Okay, I shouldn't say attacking. They're addressing it. It went from 239 million to 234 million to 231 million to 230, 229. Just chunk it, take it all out. Total assets is 523 million. Total liabilities is 573 million. I don't want to say it out loud, but when liabilities exceed assets, what does that generally mean? I'm not going to say it. Okay, glad we got that out of the way. That's a bummer. Okay, the interim CEO. Okay, these are some beautiful purchases. this guy or girl, Doosan, they're up 100%. So 2.6 mil, 2.9 mil, they're up. That's freaking awesome. What they need to do, they need to turn the ship around. I mean, we could be in the midst of them turning the ship around right now and may not even know it. So back to my calculation, apologies. So we're going to take this and divide it by 16.95. So the stock price could be about $15. Right now it's trading at 18, meaning I think it's overvalued. Analysts have this as high as 30, 11, 48, 18, 32. No. 15, and that's being nice. Their assets are exceeding liabilities. That is not a good look. Okay. So now I'm looking at price targets here. Just give me a moment. We're going to look at the bullish and bearish numbers. Okay. So my immediate bearish number is gonna be $15. That's my target, is $15. That's the bearish target. The bullish, if we're like, okay, Groupon is really legitimately in a turnaround, yeah. Optimistically speaking, I think 29. We did have those two gaps that I did say, which are way far away from here. I think it was like 50 something and 101. I think let's focus on this pattern. This is generally a bearish pattern. This is an ascending wedge or an ascending triangle. I get them mixed up. Meaning it needs to break out of this in order to go forward. However, if it does falter here and we do see it accumulate down in the $13, $10 range, I think that would be healthy for this stock because it really needs to get its stuff together. Here's another line of support around $10. So yeah, I think this stock is overvalued as of this recording. However, I mean, the momentum, if it's got momentum, it's hard to stop anything. Look at Bitcoin, look at Nvidia, look at the AI stuff. Momentum is going to carry it regardless. And you know how there's Bitcoin mining companies. There are horrible AI companies that are unprofitable, loaded with debt. They're still going up. So let's see what institutions are doing really quick for Groupon. And again, they could be in a turnaround, and I'm missing the boat here. I could be. Okay, institutional ownership looks like it's at a low. It says the new data shows 52%. The old data says 34. So that's quite a bit of an increase. That's about an 18% increase in institutional ownership. I just want to take a peek. So it's getting its bearings. It's trying. Do Vanguard and BlackRock own a lot of this? Wow. Vanguard owns 1 million shares. Morgan Stanley owns 371,000. No BlackRock. Interesting. Okay, so we see a red, we see a sale, we see 2 reds, 2 greens, 3 and 3. Okay, more reds, a lot more reds than greens. There's some greens, there's some green, red, reds. Okay, so I think this one is a little barely overvalued at this point. They need to get their balance. They need some discipline here. If I was really interested in the stock, I would do a deeper dive. If it sounds like I'm just making a bunch of assumptions off of a high level information, that is correct. If this had better metrics, I would be totally stoked and go down a rabbit hole and probably spend way too much time going into this. But they're not profitable. They have more liabilities than assets. I just can't fathom. And their sales, like, this is horrible. Let's see, are they turning it around? No, as of last year, early 2023, they had 167 million in sales. Then quarter two, they had 121. Q3, 101. So we can see this trend pretty clearly. It's a bummer. I like Groupon. I live in Vegas and I use it sometimes. So yeah. And if you do travel to Vegas, look at Groupon. There's some good deals here. I would consider owning this one if it was a little more consolidation below 19. However, if it can get hot and rolling and it really starts to take off, Godspeed. Good luck to any of you guys who do own this long. If you are short, there's momentum. So just a heads up. Take care. Thank you so much for watching. If you made it this far, consider hitting subscribe, consider hitting like, consider telling me if I'm crazy in the comment section or not. Have a good one. Bye.